Good morning, Bitcoiners, and welcome to another edition of your Bitcoin economic calendar. Today is Monday, October the 5th. My name is Mauricio Di Bartolomeo, co-founder of Ledn. And last week we had an action-packed week. This week is probably going to be very busy as well, so let's not waste any more time and dive right into it. Starting with Bitcoin, it opened up the week at $10,778 and it finished the week down $107 to close at $10,671 on Sunday for a small loss of just under 1% for the week. Now, considering the news flow that we had over the week, Bitcoin held its ground pretty well in comparison to previous cycles. The crypto industry last week was all about the US regulators taking decisive action. On Wednesday, we had the SEC issue a cease and desist order against Salt Lending for its illegal ICO and asking it to return its $47 million that it had raised back to its investors. Then on Friday, we saw the CFTC and the Department of Justice both take action against offshore exchange BitMEX for a series of continuing violations. Now, BitMEX is the largest Bitcoin derivatives exchange by volume, and we'll be discussing the potential implications of these actions in more detail in today's market trends section. Now, moving on to the S&P 500, the week started off with a continuation of a strong rebound. However, it got knocked back down on Friday to close up only 1.52% for the week. And the news that took front and center stage on Friday at approximately 1 a.m. was that President of the United States, Donald Trump, had tweeted out that him and his wife had tested positive for COVID-19. Now, the news obviously sent the markets tumbling on Friday's trading session as there was uncertainty about who else might have been could have been infected. How could this impact his leadership, and how could this impact the election process? Now, the U.S. equity markets are probably going to be under some volatility as the case unfolds, and it could drag world equity markets with it, so it's something to pay attention to. Now, moving over to gold, it made back some good ground last week, closing up $38.70 per ounce, or 2.08% higher at $1,898 per ounce. Half of those gains actually came on Friday as it rallied on the back of the uncertainty out of the news that the United States president had been infected with COVID. We will keep an eye on gold and how it behaves as this news unfolds. Now, going back to the crypto markets and looking at the FTX DeFi index, we see that DeFi continues to be under pressure, closing down the week down 6.52%, which was still considerably off its lows for the week. The news of regulators taking action against crypto companies has made a lot of people wonder about the potential fate of DeFi. This may continue to put considerable pressure on the sector as a whole, as the sector itself has been built around this idea of no KYC requirements, which was exactly why the Department of Justice went after BitMEX. So more on this later. Now, on today's market trend sections, we're going to be discussing the potential implications of the regulatory actions that were taken this week by the United States regulators. There was a great podcast out this weekend out of CoinDesk where Stephen Palley and Preston Byrne discussed the implications of the regulatory actions against BitMEX. To summarize their comments, the CFTC proceeded against BitMEX, alleging that they had been offering unregulated futures, swaps, and other types of products to U.S. residents without the proper registrations. Additionally, the Department of Justice alleges that BitMEX had been failing to comply with the Bank Secrecy Act, which requires that operators of services conduct know your client procedures to prevent money laundering. And now, because of that, the Department of Justice issued indictments against 3 of BitMEX's founders, actually arresting BitMEX's CTO on Friday. Then separately, we saw on Wednesday action from the Securities and Exchange Commission against SALT, an ICO that was carried out in June of 2017. The extent and assertiveness of the actions of the U.S. regulators have put DeFi camps on high alert. The sector is widely known to offer exchange and derivative services offerings with no KYC policies, which is exactly the reason that BitMEX founders got indicted by the Department of Justice. And DeFi also has a lot of free tokens, which is exactly the reason why the SEC went after SALT. Now, not surprisingly, data from the block over the weekend suggests that a large portion of BitMEX's recent withdrawals have headed towards fully compliant platforms. Ledn, being one of them, has actually also seen a very strong week. Now, as discussed in the CoinDesk podcast, a lot of these DeFi teams are not in any way anonymous. Many of them are actually based in the United States and have carried out some of these token offerings and no KYC services within the United States. Now, the podcast finalized with the lawyer suggesting that although the law takes time, it does catch up, and suggested that DeFi teams involved in anything similar should seek legal counsel preventively. Now, This is probably a good time to remind you that we at Ledn ensure that our operations are in compliance with regulations and have required our users to complete KYC to use our services, and are also registered under FinTrack, Canada's equivalent to FinCEN, and we have never issued a token. Now, on the Bitcoin difficulty front, the most recent hash rate or difficulty adjustment came into effect on Saturday, bringing difficulty down just a touch from 19.31 terahashes to 19.28 terahashes. Difficulty had been signaling higher throughout the week, but it seems like it came down after caution set in on Fridays after Friday's events. The next adjustment is not for another 2 weeks, but we will keep you up to date in next week's Bitcoin economic calendar as always. And that wraps up today's Bitcoin economic calendar. Just remember that later this week, we do have an FOMC meeting minutes coming out on Tuesday. And if you're not yet a member of Ledn, please do check us out at ledn.io and check out our savings products and loan products. Remember, we give you the best tools and information you need to make the most of your digital assets. Thanks again and have a great week.